This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Joining us once again this week is special guest GATA's Bill Murphy. Thanks for joining us again, Bill.
Great to be here. Thanks for asking me.
Well, we wanted to bring Bill Murphy back on the show this week. Both gold and silver have had big rallies and gains over the last few weeks. But we saw big cartel smashes both on Monday and Tuesday. On Monday morning this week, about 5,000 contracts of gold were dumped on the London Open, and then about 15,000 on the U.S. Open. Gold was down over about $30, but wasn't able to break below $1,300. And then they followed through on Thursday. I think it was around 15,000 contracts within a couple of minutes. Finally succeeded in breaking the $1,300 level for gold. Total fall from last week's highs was about $45 or $50. And this is in the face of the continuing banking crisis in Europe with Banco Espirito Santo. But then we did have a little bit of, after consolidation midweek, we had a big move up on Thursday with the tragic news of the Malaysian Airlines Flight 18. And I know before we started the recording here, Bill, you had some interesting points on the follow-through takedown today here on Friday that the cartel would not allow gold to sustain its gains on the international crisis.
Yeah, from my experience, they not one time in 15 years, and probably more than that, have they allowed gold to hold gains directly due to an international crisis. It may go up eventually around it, all kinds of things, but when it's seen as a direct response, they take it down right away, or actually take it down even that day. So it was surprising yesterday that gold did as well as it did. And, of course, naturally, they came right back again starting yesterday late afternoon and worked it over this morning. But, boy, at the end of the day, I think, the key level is 1310. We're right there right now, and that's where it bounced off of so many times. And I think we got some good stuff coming in the weeks ahead.
Yeah, gold traded as high as 1325 Thursday evening after the international crisis with the Malaysian Airlines, and then here on Friday traded down to around 1305 before rallying a bit here in the late access market throughout the afternoon here on Friday. What's your take, Eric?
Well, I agree with Bill. There's an underlying strength in the market that is different than we've seen in different periods this year that suggests that buyers are waiting in the wings to purchase, and you saw that directly at SB Bullion earlier in the week when the prices did come down on Monday and Tuesday. You saw a leap in sales, and that's not surprising now because given all of the fundamental backdrop, everything is pointing to higher prices. The ironic thing about the suppression that we've seen as aggressively as it has come since last April is that the fundamentals keep getting stronger and stronger, and that will drive prices higher, even though the cartel has their way here and there. But I want to roll back the time machine to our show last week when I was looking to say that the $25 silver is being a possible target this ending month, and it's still possible. It's far less likely now that we can see where the cartel has been coming in and basically freaking out anytime we get anywhere near $22 silver. We've seen a number of things similar to what happened yesterday, breaking up the 15-plus year pattern of the cartel constantly pushing the price of gold down as a safe haven asset that's verboten in their way of looking at things. They want people to run to the U.S. bond market for safety as opposed to gold or silver. Last week we saw a couple of pretty unusual things. On Thursday the shares got pummeled, mining shares that is, and nevertheless that failed to be a signal that actually was followed through because, frankly, the cartel wasn't able to push prices down, and we closed the week last week on a strong note, relatively speaking. And we've seen signs like that indicate that the typical patterns that the cartel usually follows have been breaking down, and that's one of the things that Bill follows daily, and James McShirley, somebody who contributes to his reporting in the Midas letter as well, follows, and it's really interesting, and that's one of the things that I'd love to ask Bill about. Can you comment more about what we've seen as far as cartel patterns that are kind of fading away a little bit, indicative of possible difficulty of them to manage the managed retreat of gold and silver?
Well, it's a good point, and there's so many. I mean, can't get into them all, but this James McShirley, lumber company CEO, has traded futures himself for 25 years and is very involved in the futures trading in the lumber industry. I mean, so he's a man who knows what he's talking about, and he's got a great sense of humor, and he just follows this stuff, and it's and documents it. And as Eric's saying, you know, a lot of these things that they're doing, little by little, compared to what's happened over the past couple of years, are starting to be violated. And whether it's going up in certain report days or violating a certain amount that gold's allowed to go up, or there's all kinds of different things we get into. But the point is that they're not working with the same regularity as they did for years now, and that's a sign that the gold cartel is having trouble. And if we're correct, they're going to run out of ammo in gold and silver to meet demand. We're talking about the fundamentals are terrific. At some point, they're just going to hit the wall with all this stuff, and they can't do it anymore. I mean, one obvious thing, but it's true, is that you look at even like Denver can't get its. I mean, Germany can't get its gold back, and it's just an example. But there's all kinds of little things, statements that have been made by the ECB, certain changes in various rules, and the way the market's trading. And anyway, I think it suggests that we've got some real fireworks coming in the weeks ahead.
You've developed a theory about JPMorgan in relation to the silver market. Can you expand on that? Because I think our listeners.
Well, yeah, it's just my own theory, because 2 or 3 years ago, when silver was on fire, my sources who were really good in Europe, I mean, these guys have been around a long time, so they've never seen the silver market so strong with premium so high. And this went on for months, and I mean, I thought things were going to just, really get, take off, and that's, of course, then silver collapsed. And my feeling is that JPMorgan bought up the silver market way up high, and then in the paper market, 2 to 3 or 4 or 5, pick a number, 6 times sold 6 as much of what they bought in the derivatives market, in the over-the-counter market, COMEX, different places, and then went after and buried the market and started dumping the silver as the market was going down, and of course making a fortune in the paper market. And now I think, and silver has acted, and I've been writing about this, the worst acting market I've seen. I've been around it for years and around commodity markets since I was 25 years old. And all of a sudden, in the past month to 2 months, the trading, the way it feels and what it's done has been completely different than it was for 2 or 3 years. And I think that portends that Morgan now has gone through their stash, and I know that there's not and of course the premiums are nowhere near what they were back then, but right now the open interest is very high. It's almost close to record highs, and in the past couple of years, the longs have been flushed out by Morgan. Now I think these guys are ready, and they're looking for for silver to shoot for $100. And they're building up these huge positions on the long side, ready to take Morgan on. And that's the way it's been trading. And even now, they didn't get flushed out again. It just went yesterday to a new recent high, around 165,000 contracts. So I think if we can get above $22, you could start getting a squeeze sort of thing. We could have some real fireworks.
Right. And just to be clear for our listeners, you're speaking about the period of 2011 when silver went to almost $50.
Yeah.
And that JPMorgan was accumulating physical at that time, but then 5, 6, 7, however many times more so in the leveraged paper market, they were shorting all the way up. And
that's right. And so they made a fortune on it, and then had that physical to hit the market with.
Right.
Because and now I think that they've run out, basically, and so that's why silver's trading so differently.
Yeah, and the point about premiums is also important too, because a lot of people say, hey, we have really low premiums now. How can there be a scarcity of silver? But when compared to that 2011 ramp, when they were buying physical, there was high premiums on silver eagles, in fact, all across all the products, just because silver was in tight supply. And if your theory is correct, you would expect the premium to be expanded even more so above.
Eric, you're so right, and that's what I wanted to add with just what you said. The big guys know what's coming. and the market will take off before the premiums, the high premiums kick in again, and it'll come out of nowhere. And so this is no surprise.
Yeah, the premiums really were astonishing back in 2011. I mean, just at retail dealers, you were talking $6 to $7 an ounce over spot and Silver Eagles. But I remember eBay at the time, if obviously these are smaller purchasers, you're not buying a monster box, or a large investor is not making a purchase on eBay. But for smaller retail investors new to the market, that their friend had told them about silver and they went on eBay to make a purchase, Silver Eagles were around $15 over spot at the time, and which is pretty astonishing compared to current levels where you can buy a Silver Eagle pretty much anywhere for under $3 over spot.
Do you think that, Bill, at any point the takeover of Bear Stearns and that whole book, because they did have a large silver derivatives trading desk, how do you see that fitting into this whole idea about JPMorgan?
Well, I don't get into it too much because I'm not an expert on it. I know Butler's got some theories on that. I just don't know. I try to stick to what I'm confident in talking about, but anything that has to do with JPMorgan and anything related to it, and the banks and the government and takeovers, it usually smells to high heaven. And I'm just hoping that we're getting to the point now where they actually are going to start hitting the wall with what they're able to do.
Yeah.
I just think we're building up to a tremendous next 3 or 4 or 5 months, and the volatility on the upside is going to be much greater than we've ever seen. And we could have some just violent moves in gold and silver. As I mentioned earlier, if silver can take out 22, the base it is formed is just monstrous. And when a market has been down and everybody can't understand how the thing could get so cheap and for so long and why, those are the markets that when they do turn around are usually, are vicious on the upside because of what's been done. It's been taken at too low a price for too long, and when it starts to move.
So, Bill, you're looking for a move off the 2.5-year consolidation now to be even stronger than that we saw from the second half of 2010 through the first half of 2011 in silver?
I would think so. Yeah. I would think so. Silver, what the heck? If we go back to 50, it's the price it was for whatever reason 34 years ago. So, and if I'm right about that, Morgan's gone through the stash, their stash, they won't be able to slow it down once it gets going.
In the 2010-2011 period, we were dealing with assumptions by investors focusing on inflation and the monetary base expanding, and negative real interest rates getting even more negative, and all of that whole ball of wax in relation to the recognition of ongoing QE was the operating thesis of most big money and commodity traders and whatnot, but even the conventional people in the market that are just going for a speculative ride that basically greens light precious metals. And then when you fast forward to today, that whole thesis was here back in April, February to April. That move in part was driven by that whole rekindling of the quote-unquote inflation trade. But now we're seeing fears of default risk and turmoil in the global financial markets that, smack of 2007, 2008, 2009 kind of rerun, and that will probably be the catalyst that pushes precious metals higher this time around. But the bottom line is that the fundamentals still, any way you slice it, are really, really strong for precious metals. And in converse to the financial assets across the board, whether it's the bond market or the stock market or whatnot, you have record levels of low volatility, super high valuations in the equities market, and an economy globally that's on thin ice, if not in danger of contraction very strongly. And then you add on the geopolitical layer, and it really does point to just unbelievable fundamentals that the vast majority of the conventional thinkers on Wall Street are pretty much ignoring.
And back in 2008, 2009, the death of the dollar's reserve status was not nearly along the progression that it is really in the last 12 to 18 months here. It's progressed quite a bit since 2010 2008 to the 2010 period that we're talking about.
Conventional wisdom, most people would scoff at the idea of the dollar losing its reserve status 5 years ago and so forth. But now we see mainstream headlines in Wall Street Journal and Times of London and so forth. People are talking about this out in the open as if it's a not too distant future prospect.
All right, well, I wanted to give the listeners a quick update here on the status of the physical market and the retail and wholesale side in the U.S. And with the first half of the week where we did see the big takedown of gold and silver, where gold was pushed back under 1,300, silver was pushed well back under 21. Really, the interesting thing, we haven't seen too much of a change in premiums on the retail side, but we did see big money enter the market in a big way on Monday and Tuesday with that pullback. And you really can see that the big investors have been watching the rally off of 1850 in silver, and we're down near 1,200 in gold, and they've been waiting for the first pullback to materialize to enter the market. At least at SD Bullion, we've been seeing that in a big way the first half of this week, that big money really took advantage of the pullback offered on Monday and Tuesday to enter the market in a big way. So we'll see if that continues, but certainly it's indicative of a change in sentiment. I believe that you have large physical investors making substantial purchases at the first opportunity of a pullback.
If I might, I can add one thing there that I've heard from my sources, that the silver physical trade in Europe is extremely robust.
Yeah, it's robust in Europe. It remains pretty robust here in the U.S. We've mentioned the premiums aren't what they were a couple of years ago, but really in North America here, Canadian maple sales are on pace to shatter records. I believe the U.S. Mint Silver Eagles are still on pace to set all-time sales records. So demand is far from soft here, but there has been enough supply to meet the demand that we haven't seen the exploding premiums like we did a couple of years ago.
So, Bill, I'm curious, in the 15-plus years of doing this in GATA, from going from the earlier years of basically being forbidden for media people to speak to you, basically because they don't want to get the message out. And you've had people at Bloomberg and the Financial Times tell you directly that, we're not supposed to talk to you. It's not like that's just an opinion, but you've literally had reporters and producers and so forth basically saying that they're being censored by their producers to cover GATA's story. I'm curious that now that we are this far along in the bull market, and many of the things that GATA has been saying all along have in fact come to pass. Have you noticed that you're getting more recognition from, say, portfolio managers or people on the street who are interested in learning what's really going on, because the things that have been going on have gotten so crazy that even conventional thinkers are starting to wake up and say, hey, maybe these folks at GATA got it right. I need to learn more.
Privately, Eric, that's very true. I know that for a fact, too. But when it comes to the press, GATA is still a four-letter word. I have not been back on CNBC since I was first interviewed by Ron and Sada in February of 1999. And you're right. Bloomberg has said that they're not allowed to be mentioned. We just, no matter what it is, and if we're going to end up with this, the reason is that the GATA story, all the stuff now about manipulation. Of course, every market now is understood to be manipulated. I mean, the LIBOR and the currencies and energy in certain areas, and why wouldn't they think gold is not manipulated? Is beyond me. But it is the biggest story of all, and it will be the biggest financial scandal in U.S. history when it breaks, because probably of our lack of gold and what's going on and what they've done and so on. But because it involves the U.S. government, nobody will go there. Nobody.
So being open about manipulation in the bond market is actually serving the interest and the goal pushing traders. Yeah, they
don't. Everyone knows that the bond market's manipulating things. But gold? Oh, no. As my colleague Chris Powell says, the United States would rather reveal its nuclear secrets than what they've done with the gold market.
It's important for people to realize too that the Treasury and the Fed declaring openly that they're going to manage the prices of bonds up and interest rates down gets all of the momentum traders on that trade as well, and people believe that the Fed has their back, so to speak. So announcing that they're openly managing markets manipulating markets in the bond market and even in the stock market, though they don't declare that openly, is it's to their advantage to make that information public. Whereas in the gold market, manipulating prices down would basically invalidate the desire to hide the smoke alarm aspect of gold. Because people would say, hey, why are they manipulating prices down? They're trying to hide something. There's a fundamental difference, and I think that explains to a very large degree why gold is hush when it comes to the powers that be and their denial of manipulation versus other markets.
That's pretty much it.
All right, so GATA's Bill Murphy joining Eric's call for some potential fireworks in silver here over the second half of 2014. So, Bill, thanks again for joining us. Always our pleasure to have you back.
Thanks.
All right, so for the Doc and Eric Dubin, thanks for tuning in to the SD Weekly Metals and Markets.
Those individuals who are in charge of monetary policy around the world, I think they're very much aware of what is coming. When I've asked Federal Reserve Chairman in the committee about this, they never said, no, that's not going to happen. They used the word orderly. As long as it's orderly, it seems to be okay.